Well, thank you, Christy. And I should point out that I'm interviewing Luca and not the other way around. It's going to be a much more interesting conversation. Luca, thanks for joining us. It's an interesting time, as we all know, in the critical mineral space. For Wyloo in particular, as Christy described, you made the acquisition of the Ring of Fire project a couple of years ago. Then you've consolidated the Kambalda district, the famed nickel district. And the nickel price has proceeded to head on a downward trajectory. You're, I believe, near completion of a joint venture with Hastings of a rare earth project in a market which has been particularly flat. I can only guess that Wyloo sort of doesn't look at this critical mineral space with a short-term perspective in mind. You must have a much longer-term outlook for a positive longer-term outlook for the sector.
Yeah, I think so. And I think you have to be that way if you're going to own assets. You know, I think it's very different from being a portfolio manager that's trying to hit a return hurdle every year. I think if you're going into the acquisitions that we've done, you really have to have a longer-term horizon. And I think if you've kind of stepped through all the deals that we've done over the last couple of years, but things like the Ring of Fire, really big, prolific basin that hasn't been developed but has had a lot of discovery over the last couple of years. What drew us there was the Eagle's Nest project, so the nickel copper project. But it's also got a huge chrome resource. So for us, just a multi-generational opportunity, and I think for us an opportunity where we thought we could bring our expertise to finally unlock it. So if you look at the history of the Ring of Fire, it's historically been a bunch of junior mining companies came in there, made discovery, it slowly got consolidated and then ran into typical permitting hurdles, particularly around First Nations. And when we joined, we thought we could overcome a lot of that. And thankfully, over the last 2 and a bit years, we've really made some strong progress in Ring of Fire. And yeah, really good to see things like the development of the road finally happening. And things are really moving at full steam in Canada. So really happy with that project. Kambalda, similar story. I think, of course, as investors, we're trying to time cycles well. And if you look at the Mincor story, invested in the early days of Mincor when it was a $30 million company and grew our stake. So we owned 20% of Mincor for a long time. Really helped the company grow, helped them with their deal with IGO. So started to consolidate that Kambalda belt. And then nickel went bananas, they built their project, and then it started to come off, and we were watching it really carefully, and we were seeing it drop. And it went from $2.50 down to about $1. So it had really fallen quite a bit. And nickel was coming down, and it sort of found a bit of support. It was around $9 a pound-ish. And then we launched our bid and we acquired that asset, and then it's subsequently gone and fallen again. So you kind of, I always tell my team, don't try and pick the top and the bottom. You're never going to get it perfect. We've got to try and do the best deals we can. But really, we've got to have a longer-term view on where these things are heading. And I think, you talk about this kind of critical minerals story, the thematic around it. When you think about where we are with EVs, where you think about where we are with electronics, technology, whichever sector you want to talk about, EV penetration rates are kind of in the high teens. We're just at the beginning of this journey. And you just think about all the new tech that's coming out that's using batteries, that's using rare earths, that's using all these elements. It really is, I think when we think about it, it's almost like an industrial revolution. Like first it was steam power, coal, then it became some form of oil, then we went to gasoline, and now we're kind of heading into this electrification revolution, and we're just at the start of that. So I think for us, very comfortable that over time these commodities do well, and these assets will become valuable because they're getting harder and harder to discover. We're having to look deeper, we're having to look in other jurisdictions, and in particular with nickel sulfides, very, very difficult to make discovery. There's a lot of laterites, of course, in Indonesia, but on the sulfide side, we haven't had a lot of discovery over the last couple of years. So.
Yeah, on that nickel sulfide, it's a commodity that we haven't really talked about so far today, and it's slightly different. It's in a slightly different sphere because it's a much more mature and deeper industry than say lithium or rare earths. What are the key indicators that you're looking for that are going to give you encouragement to press ahead with either the restart of Kambalda or put the foot down really hard on the accelerator over the Eagle's Nest?
Yeah, I think the Wyloo portfolio is actually quite a unique one and quite interesting, because with things like Eagle's Nest, it's such a low cost asset that you would bring it into production at any point. And it's polymetallic, so it's got a lot of byproducts. So that's the kind of asset that you'd bring it into production, and you would produce for 20 years out of that asset, and you'd ride a lot of ups and downs in the nickel market. Kambalda's a very different proposition. It's always had a very short mine life. It's been able to replenish itself year after year. But because of the nature of those assets, and because they're quite inexpensive to switch on and off, it doesn't pay you to keep them producing during down cycles. And that's a decision point that we got to, unfortunately, with Kambalda, was we could see that there was going to be a prolonged period of low nickel prices, and for us it didn't make sense to consume our reserve life to go through a down cycle. But the great thing with Kambalda is also that you can switch it on very quickly, and it's very high grade. So when prices are high, you generally do very well. So we've got two very different styles of playing the nickel market. One is, you know, you're bringing assets on very quickly to take advantage of peaks, and then another asset that's just very low cost, long life that you'll just keep producing from.
There's been a sort of existential crisis in the West Australian nickel sector in the last 18 months as supply from Indonesia comes in and floods the market, if you like. Is it the same in North America, and looking at Ring of Fire and other assets there? Are they undergoing the same restructuring and contemplation about whether it's the end of the industry as we're talking about here in WA?
I think they've certainly got their challenges. You know, some of the mines in Sudbury have been struggling through this cycle. So yeah, to an extent, but again, I think most of the companies that own these assets, the Glencores of the world, Vale, they have gone through multiple cycles like this, and they really understand that in the nickel space. And the reason nickel does this is because it has a very flat cost curve. So generally, when the price drops, it kind of finds support in the middle of the cost curve. Then you need to feel a little bit of pain, and then a lot of supply comes out the market, and it just takes time for that to work its way through. I think the interesting thing that is playing out, and I think it's across all the commodities, is just these cycles are getting smaller and smaller. So historically, it would take 4 to 5 years for nickel to kind of go through a full cycle from peak to peak, where now you're starting to see it move a lot quicker in directions. And I think that's true with lithium. I think it's true with rare earths. So the cycles are becoming more compressed, and I think in the nickel space, it's because it's no longer just a stainless steel market, it's a battery market. So you've got a very fast-growing demand side. What's played out in nickel is that you've had equally a fast supply side come online. So you just got to wait for that to come through. But I think where we are as a sector now is, you can see some of the Indonesian nickel miners put out their results. They're really struggling at the moment. So our view is it can't stay at this level for much longer. At some point, it has to come back. Otherwise, you're just not incentivizing supply.
Looking at nickel and rare earths, in fact, all the critical minerals, the one difference to traditional commodities is the influence of state support and geopolitics in this entire landscape. Where does Australian nickel, for instance, or Australian rare earths find itself at the moment? Is the geopolitics enabling greater investment in the sector, or is it working as a handbrake to prevent further investment and success in development in this sector?
Yeah, I think commodities is a funny game, and unfortunately, you get caught up in geopolitics, and I kind of use the example of critical minerals being the new oil in a way, and you've seen oil get weaponized and politicized over the years, and you're kind of seeing that happening in critical minerals as well. I mean, I think that it's a big question. I can talk about it for hours and hours, but even with my team today, we were talking about like, where are these pools of capital to build mining projects? They're shrinking and getting smaller and smaller. And I was at an event the other day, and someone was saying, well, why don't our super funds get more involved in putting money behind building mining projects? They're just not designed to do that anymore. They're very passively managed funds of pools of money, and they want to take no risk. And unfortunately, geopolitics only adds to commodity volatility, which is risk in everyone's mind. So I think we're quite uniquely positioned as a private capital group that hopefully we can kind of see through some of those cycles. But I think it's very challenging for the junior mining sector these days. And even if you've got a very good project, you could find yourself in a dip and really struggling to fund your project. And I think finding the pools of capital within the Australian context is really challenging. And you see a lot of projects trying to go abroad. In the rare earth space, you hear a lot about Saudi Arabia now, as a source of capital, and it's just getting harder and harder. And I think maybe the traditional capital markets model that we've got in the West is kind of letting the sector down in a lot of ways. Do we need longer term capital that can kind of see through some of this? You spoke about the Australian nickel sector kind of capitulating, and the reason it's done that is we've always made very short term decisions. Mincor is a great example where maybe instead of building a concentrator, it's always gone to BHP because that's the least capital intensive thing to do. But it's really hurt them over the years because they've always had to go back to BHP. So it's things like that, if we had maybe had a longer term horizon in how we were thinking about things, that Nickel West supply chain would have been modernised and not as high cost as what it is. So I think there's a lot to learn from what China's been able to do in their country. And I think more and more we're starting to see mining companies turn to private pools of capital because they can just take that longer term horizon.
We've heard a lot this morning and earlier this afternoon about levelling the playing field when it comes to critical minerals, and that's as much in financing of projects and state support for projects, but also it strikes me on standards as well. It feels at the moment a little like there's a two-speed economy, if you like, in supplying material. We're seeing the European Union bring in CBAM and other restrictions. We're seeing expectations on Australian miners, both operating both here in Western Australia and elsewhere around Australia and the globe, being held to standards that perhaps some of our competitors are not, or peers, should I say, are not being held to. Do you think this is an important part of levelling the playing field as it is to increase the cost competitiveness of Australian projects?
Yeah, as you know, Dom, this is a topic that I'm very passionate about. I think the metals world in general needs a bit of a fix, and the problem is it's all in the word. Like, we're a commodity, which means what we make looks the same as what somebody else makes. And the issue that we have now, and you can really see it in the EV sector in particular, is you've got the traditional OEMs trying to compete with new Chinese car brands coming into the market, and they really can't. In some cases they're $20,000, $30,000 more expensive than a Chinese equivalent. And all you're incentivizing, all that's happening in that sector is it's kind of a race to the bottom, and it's just, I need to get the cheapest battery, I need to get the cheapest metal, and therefore standards kind of are a secondary thing that I need to think about. I really just need to be cost competitive so that I can stay in this market. And I think that's where we've kind of fallen short. I think, and I see some government people in the room here, I really do think we need to be thinking about if we're going to expect our mining sector to meet a really high standard in our countries, we should be expecting the same thing of somebody wanting to sell a product in our country. So it doesn't matter where it's coming from, but we should be saying, if you're using nickel or lithium, it needs to meet this standard. If you've got a product that's got that in it, it needs to meet that standard. So it doesn't necessarily have to be EVs, but EVs are a good example. We should be saying to whoever's importing EVs into Australia that if it's not meeting a high enough standard, it shouldn't be allowed to be sold here. Because otherwise, what are we doing? We're basically creating, yes, an unfair playing field where we're going, hey, mining sector, meet all these really high standards, which are wonderful, but then go and compete with another mining company that's not meeting those standards. It's really hard.
Can we have a levelling up in that case then, rather than a race to the bottom? And in particular, we're seeing over Phoebe Waddoff from Minvaro talked earlier today about the new standards and regulations coming into Europe. Will that be a litmus test of whether governments can enforce new standards that doesn't perhaps generate a green premium as such, but blocks supply from coming in that is questionable, if you like?
Yeah, in many ways, I kind of view the Trump administration's tariffs as a really poor form of trying to do what we're talking about. There was really an opportunity there to go, hey, you're not meeting the US's standard, so you're not allowed to sell into the US. So, for example, the US has a 100% tariff on Chinese EVs, so they're pretty much not sold in the US, and that's to prop up GM and Ford, essentially. Where instead of doing that, it should have been, well, GM and Ford have met the standard. Have you met the standard? If not, then you shouldn't be allowed in. Now, Europe's trying to do that with the CBAM rules, so they've based it on carbon, and they're really focused on aluminium as a starting point. It's an interesting piece of legislation. I think there's something from that to learn for all countries, including Australia, and we should all be trying to meet that standard. Otherwise, as I said, it just becomes a race to the bottom. And it's not just the automotive sector, it's every sector will face the same challenge. I almost call it like it's almost our sector hasn't gone through its sweatshop moment, where before people were, you were buying your sneakers, your Nike sneakers, until you found out that they were getting made by children in a factory. And then everyone got upset, and then they cleaned up their act. The same thing kind of has to happen in EVs, and I think it's an interesting conversation, because I remember sitting with someone in the Biden administration, and at the time we were trying to say to them, Indonesia's really not doing the right thing by the environment, and they were pushing really hard for Indonesia to get a free trade agreement, which meant they would get IRA credits. And we were kind of like, have you guys looked a bit deeper than just, oh, they're the world's biggest nickel producers? And we kind of got the comment back going, well, we don't really care how it's made. What we really care about is that America adopts as many EVs as they can, and we want EV adoption at all cost. And it's kind of like, well, what's the point of that? You're trying to save the planet whilst you're destroying the planet while you're trying to save it. So I think we haven't gone through that moment yet, and it's a difficult conversation in the EV space, because nobody wants to criticize EVs in any way, because they don't want the adoption of EVs to slow down. But I think we're at a point now where we can have a grown-up conversation about it and say there's a segment of the market doing the right thing, and there's a segment of the market not doing the right thing. And we need to kind of level that playing field. Otherwise, it's going to get really messy. And you're going to see countries, the automotive sector employs tens of millions of people in Europe and the US. They really have to prop up those sectors to keep people employed. And unfortunately, the way they're doing it now is through just direct intervention with tariffs, where there was a smarter way of doing it, I think. And it should be about standards. And then that has a trickle-on effect. The LME should do a better job of how they define nickel. We've got one benchmark for nickel, for example, and they've allowed a huge amount of Chinese Indonesian supply of nickel to come onto the LME to resolve a liquidity issue they had. Back in the day, it used to be really hard to be an approved LME supplier. Now it's really easy. There's just no threshold. Anyone can be a supplier. All it is the product quality. It doesn't matter how it's made. And so groups like the LME have a responsibility. Government talking about setting up a strategic reserve, potentially being a seller in that market. That's an interesting dynamic to think about, because all of a sudden you've got the Australian government selling metal. Somebody's going to be buying that metal, and you could market it as, hey, this is Australian endorsed metal that should trade for more than maybe metal being produced in a dirty fashion. So does that lead to some kind of bifurcation of the market? I think when we talk about green premiums, everyone thinks that it's a hope and a prayer that you're going to get a green premium, but I actually think it comes from a regulatory push. I don't think it's a green premium per se. I think the market bifurcates necessarily because regulation dictates it. And I think that's where the market kind of heads. I don't think it becomes a voluntary. I don't think you can expect OEMs to voluntarily pay more for metal. They're not going to do that. They want to be cost competitive. So it's going to have to be a push from government to get it done.
Great, Luca. Thank you very much. The red lights are already flashing at us. I knew 15 minutes was woefully adequate for us to get through everything.